I think also, as you see in the past many decades, the interventions that you collectively have made in Asia have really made Asia the growth engine of the global economy and will continue to be so for many decades to come. And this has been a really successful journey in terms of lifting millions of people out of poverty and transforming the economies, urbanizing the region at record pace. But all that has come at a cost in terms of natural capital. It has come at a cost of some degradation in terms of air quality, water quality, land management issues, etc. Right? So I think that is the context. I have a few slides that I wanted to share with you on how we can approach this balanced view for climate and development into the future, and really what role public and private sector play. Also very glad to see that in the morning sessions, there were already some discussions and interest towards this. So one other point to make on the setting the stage context, and then I will come back to the slides, is that as you see forward, maintaining the growth trajectories and implementing more transformative policies and translating that into your respective budgets, we see that maintaining this growth is becoming more and more complex. And you have a lot of headwinds from mega trends that the global economies are facing. Post-pandemic recovery is still uneven in many countries. It is unequal in many countries with spatial and sectoral variation. You see the impacts already of inflation creeping into many economies within our region as well. You have challenges related to accumulating debt, managing that problem, together with the impacts of fuel and food price increases as a result of the war in Ukraine. So these are immediate term challenges that all of you are facing. And on top of that, you have the longer term trends of managing the climate impact and managing urbanization, managing the demographic changes, managing even the change in value chain, which we are seeing as geopolitics around trade emerges as a new reality within our region as well, right? So I think it's important to contextualize those aspects and think through the trade-offs of policies that are important to maintain the momentum on developing while also facing longer-term crises around climate change, and what should be the respective roles and responsibilities of each of the participants, particularly public and private sector. I'll work through some of the quick examples and won't dwell into the sectoral details because that was covered very well by Sebastian and other speakers. But I think the final slide around what corresponding issues can be addressed through public resources and optimized public resources at that with private sector incentives is quite important. So next slide, please. Here you see, again, we go back to the case of Vietnam, but I think in terms of the scale and the patterns and the trends that you see, this is similar to many countries in East Asia Pacific region. Vietnam is a very emerging, fast-growing economy with massive energy needs. As Sebastian was saying, that in Vietnam as well, we see if GDP growth on average is 6 to 7%, the energy demand is growing at about 7 to 8%, so outpacing the GDP growth itself. While the consumption per capita is still very low within the region, the growth rate of the demand is much higher than many of the peers within the region, let alone the OECD countries. But on the right side, you see some of the more worrying aspects of this growth, where while again, the emissions per capita are much lower in Vietnam compared to many of the other global economies, advanced economies, the growth rate of emissions per capita, or another way of looking at that is the power grid emission factor, is one of the highest in the regions. And for the last decade or so, Vietnam has been the fastest growing per capita greenhouse gas emitters in the world, beyond even China and India. And so the challenge to consider is why that is and what can be done about that. So next slide, please. Here we see, again, the story very similar to not just Vietnam, China, Indonesia, many of the countries in the region, that predominantly the growth of the economies from an energy standpoint has been fueled by carbon-intensive resource utilization. And in this case, it's coal-based industry, where the installed capacity of coal in Vietnam has quadrupled within the last decade. Coal, while accounting for about a third of the installed capacity, is about 60% of the electricity that is generated, right? So overall, the energy sector footprint is about 65% or two-thirds of the national emissions, of which about 61% comes from the power sector alone, but the rest is also being impacted through industrial use of coal, some use in transportation as well. So I think overall, while the footprint still remains below 1% of the global consumption of coal in Vietnam, if this pattern continues, it is not only an impact to global public goods, but the impact is being faced locally within Vietnam, where you have rising levels of urban pollution in Hanoi, which is one of the top 5 most polluted cities in the world now because of some of the impacts related to that. Then that has corresponding impacts to productivity through labor flow losses, as well as health impacts and the cost to the economy as a whole. Next slide, please. So some of the analysis that we have been doing with the government is about how do we look at it in terms of future growth that maintains first energy security, also takes into account environmental commitments in terms of both NDCs as well as long-term emission scenarios, which Vietnam has committed to now decarbonize and become net zero economy by 2050, while also considering, very importantly, affordability, which is the financial viability of this transition. So I'll come back to that point, and this context is critically important when considering the role of the public and private sector, because it's not just about financing, but it's also about the cost of financing. So on the left, you see historical trends where most of the investments were planned to be around fossil fuel growth, which was coal and gas related. In the middle, you see the commitments that have been made over the last decade and transition into the investment plan of the power sector, which is predominantly based on renewable energy now, as well as on the right-hand bar, the possible suggested scenario, which we call an accelerated decarbonization scenario, where you see 90% of the installed capacity of the power system by 2040 can be based on clean generation resources. This is solar, this is wind, this is offshore wind, this is energy storage-based systems, while still keeping a small footprint of natural gas and coal in the mix, which can then be further decarbonized as the technological, cost-effective technological solutions are being advanced and developed. The key point in this is that this is based on currently proven available technologies that have already been tested in Vietnam and in the region around. And this is something that has local value chains, local expertise, as well as local risk appetite within domestic and partner private sector from around Asia Pacific that have been heavily investing in Vietnam. In the last 2 years, Vietnam has installed 20 gigawatts of solar and wind capacity, on placing them as one of the top 3 countries globally in terms of how fast this renewable transition has taken place within this context. On the right hand, you see the relative share of electricity, the electrons that get generated through this energy generation mix. And most of that, again, is based on currently proven technologies that can be deployed reasonably to decarbonize the economy. As much as 80% within the power sector in the next 20 years is feasible, technically feasible, but then you have to consider what are the cost implications to this in the next slide, please. So from our perspective, what the biggest challenge to consider in this scenario is, in addition to maintaining energy security, in addition to honoring the climate commitments, is how do you jumpstart that transition through investment priorities as well as incentives that you can provide both to the private sector and in some cases state-owned sectors as well. Within the case of Asia, a large footprint of state-owned enterprises which is present. So on the left, you see the emission trajectory that is possible based on the accelerated decarbonization scenario where coal-based power generation can peak by middle of this decade and overall emissions from the power sector can peak by 2030, leading to about 80% less emissions annually within the power sector. But on the right, then you see the implications of the capital cost. There is a big shift in investment dynamics in the energy sector, which is low carbon based, in that it is cheaper to install, let's say, a fossil fuel based plant like a coal plant, but then you pay monthly fuel bills. Whereas in the case of renewables, a lot of those investments are capex oriented, that you have to, in the initial stages, have higher installed capacities, more investment on the grid, more investment in storage, but then you don't have the running cost as the fuel bill, because these are essentially free technologies beyond the O&M and the wages that you have to install on these plants. So from a nominal perspective, it is about going from $200 billion in the next 20 years to about $350 billion. That's 70% higher price tag on capex itself. Again, very similar to China. This is about the same scale as Vietnam's current GDP. On the discounted basis, it is increasing from about 100 billion to about 166 billion, so about roughly a $50 billion additional increase. And this is just capex on the power sector. And then you have issues to consider in addition to that, which is about just transition. How do you compensate for the people, the businesses, the communities impacted through this transition? How do you compensate for some of the stranded assets that will be generated? Sebastian was talking about average coal fleet in China being 13 years old. In Vietnam, it is 7 years old. So it is going to be a real challenge to make sure that the investors are not left hanging with an investment asset which still could potentially generate economic value. Last slide, please. So all of this put together is, what does this mean for you as practitioners within your respective budgetary ministries? If you're looking at generating scales which are 3 to 5% of GDP in terms of investment, there clearly is not enough room, while you're also managing the fiscal impacts of extreme weather events, natural disasters that are coming in, challenges on fiscal stability, inflation, while also incentivizing green development into the future. Private sector really needs to play a front and center role within these sectors. A lot of the decarbonization type investments end up being infrastructure oriented. And while traditionally in the Asia Pacific region, this has been an area dominated by public investment, state-owned enterprises, over time we see that this has become more and more private sector oriented. A lot more investments are coming in. And I think the one caution I would raise here is that there's been a bit of an extreme reaction in many of the jurisdictions. In Vietnam, for instance, energy sector is considered a fully private sector oriented business that does not benefit from any state support, any investments driven by the public sector. It is all considered an enterprise industry where state-owned enterprises even are raising commercial financing. But from our perspective, if you look at the total capex needs of about $350 billion, power generation is about 2/3 to 3/4 of that, which rightly is mainly driven by private sector, whereas the grid infrastructure, which is the common public good infrastructure, is still owned and operated by state-owned enterprises and certainly requires some interventions so that those common infrastructure elements are readily available and incentivizes private sector investment. So overall message on this slide is to consider the 3 Ds. The role of the public sector really should be de-risking, demonstrating new technologies that are coming in, and then assisting in deployment at scale for private sector to come in and start to scale up green investments. Working through some of the 4 key policy challenges within the power sector, you see issues related to planning. This is about investment plans being solidified based on long-term emissions and growth trajectories. What are the approval procedures? This is not something that a private sector can tolerate as outstanding risks. So market sizing, how much investments to place in there, And all of this requires budgetary action. It requires investments from the public sector to carry out the planning procedures, to clarify investment licenses and procedures related to that. The next step is procurement. Again, at the moment, for large parts of Asian economies, there is no standardized approach, especially in Vietnam. This is related to ad hoc negotiations for each project that are carried out. And certainly the role of the state here is to provide the transparency, provide the investment conditions that are transparent and predictable, whether through auction-based mechanism or feed-in tariff-based mechanism. Those regulatory changes, again, require initial policy changes and investments and corresponding budgetary support. Third is the financing mechanism, which is critically important as well, where the risk allocation for the contracts that you orchestrate in the power sector need to be, again, under the microscope. The tendency seems to be that, well, these technologies are getting matured, but for a lot of the financing flows towards these investments, an imbalanced risk allocation from a contractual standpoint will either prevent deployment of capital, or if the capital is deployed, it will be deployed with a risk premium baked into some of those investments, so higher cost that eventually will be passed down to the consumers as higher tariff increases. So in order to balance that, I think the last point here is both balancing the risk allocation as well as deploying concessional funds, which can over time not only fill the viability gap, but maintain energy price security for consumers is absolutely important. So here, public-private partnership type laws, which are still rudimentary in many of the jurisdictions, including Vietnam, need to be further strengthened. As the question was asked from the floor, well, what is the right approach towards investing, whether it's equity, whether it's debt financing? I think a very important role here can be around sovereign support for guarantees, for maintaining off-taker creditworthiness for the contracts that are signed by investments that are coming in, and having a corresponding contingent liability management framework within ministries of finance is going to be critically important. Overall, our assessment within the case of Vietnam, and again is similar to many other countries, is that about a quarter or less of public support in terms of the overall CapEx needs, whether through direct investment lending or through certain equity or concessional long-term financing for these infrastructures, or very importantly, through investments in policy and investments in guarantees, can really unblock the billions of financing that is necessary in the transition of the power sectors led by the private sector. Most importantly, the sequencing and timing is important. So typically, given that this is de-risk and demonstration and deployment at scale, the public sector contributions need to be the first mover within these spaces to enact the investment conditions, to make sure the grid infrastructure is ready to absorb the private investments that are coming in. I go back to the point that I raised, that 20 gigawatts of investments came into Vietnam, around $17 billion invested. Well, about 30 to 40% of that is curtailed on an ongoing basis because the power grid infrastructure is not ready to absorb all of that investment that is coming in. So on one hand, you have oversupply, and on the other hand, there are parts of the country where there is undersupply of power, and that matching infrastructure is still a big challenge for Vietnam. So let me conclude here in the interest of time. I know there is a lot more we can talk about these issues with two big points as takeaways, and we can keep some time for discussions. First is that as you see future growth and manage the trade-offs and headwinds that each of the economies are facing, you also need to balance the short-term issues that are being tackled today, but keep an eye on the longer-term, no-regret type investment policies and ensuring that those are budgeted and prioritized within the fiscal space of each country and each sectoral context. The other big takeaway is that the public sector still has a very, very critical role to play to incentivize private sector-led investments, and those typically can be optimized to a much smaller volume of the overall investment needed, but should be strategically placed in the right de-risking type investments and should be done earlier than the private sector investments can come in to make sure that the timing mismatch issue is addressed as well. Let me stop there. Back to you, Kuyen. Happy to take questions and answers.